Tracking of data is something that many traders do ignore, and as trader it is very important that we do track our data as traders. Now, the only data that most traders do track is the data of their profit and loss, the one that is very close to them, the one that they can access maybe with their MT4 easily. And then especially when they have a lot of winning trades, they will just be scrolling on it and be measuring the winning trades. But I'm telling you that that is not only where tracking of data ends. Now, that tracking of data that we are talking about can help you in a lot of things. Number one, it will help you in checking if you are executing your trading strategy properly, because as a trader, before you apply any trading strategy, you must have worked on it and know how it works. Now, tracking of that data is what will tell you or will show you if you are executing that strategy properly. Then the second one is the market regime. As we know that the market move from one regime to another, it do shift. There are a lot of times that the market will shift from one regime to another, maybe from uptrend to downtrend or ranging market, as the case may be. Now, the data that you use to track is exactly can tell you or will help you dictate exactly where the market is. Now, it will also help you observe your backtest, your backtested data that you already have kept somewhere documented. The tracking of data will help you to observe it or check it and know if it is exactly coming together as your trading strategy. The data that you observed or that you collected during the back test, then tracking of your data will help you to know if it is exactly tallying with the back tested result that you have. Now, let us define tracking of data and know exactly what it is. We say that tracking of data is simply observing if the differences of the parameters that make up your trading strategy is coming out the same way. The parameters that you put down, all the information that you put down during backtesting of your strategy, if it is tallying, if it is coming together to be one. Tracking of data is simply the observation of different parameters that makes up your trading strategy. It is always relying on past information. It always relies on past information. It is simply observing the parameters that make up your trading strategy. You know, if you are designing your trading strategy, there are a lot of things that you will add, minus, put and subtract that will make up your trading strategy. Tracking of data will help you if those things that you have put together are they working to make your trading strategy a trading strategy that you know. Now, there are a lot of things that we observe while tracking, why we track our data. A lot of information that are there that we need to observe, that are the things that we need to track. Number one is win rate. Win rate is very important if you are tracking your data. Number two is win ratio or loss ratio. Win ratio is an information also that we need to check while tracking the data of the trading strategy that we are applying. Another one is maximum drawdown, which is very important. You need to know the maximum drawdown if it is coming exactly the way the one that you knew when backtesting it, if it is coming together. Maximum drawdown. Now, another one is maximum consecutive loss. Maximum consecutive loss, very important. Then another one is behavior of different currency pair or instruments, the way the instrument that you are trading are behaving. Tracking of data will help you to know how they are behaving. Now, what are the benefits of tracking of data? It will help you to know if you are trading or executing your trading strategy religiously. It will help you to know if you are trading your trading strategy. That trading strategy that you know, that you brought together, that you put together different indicators that you put together that made up your trading strategy. tracking of data will always help you to know if you are following it up and trading it religiously. Now, some of the information for tracking of data can easily be found in your trader's dashboard. If you go to your trader's dashboard, you will see some of those information that tracking of data that you will use in tracking of your data. Most of our traders dashboard will give you those information. Now, if you are a systematic trend follower, that will always be easier for you. Yes, if you are a systematic, because systematic trading always repeat what it does every time, year in, year out, it repeats it. So the data will always be together, the data will always be the same, so that you can be able to analyze it. I mentioned systematic trend follower because it's among the trading strategy that will give you the accurate information. It will give you the accurate information because it's systematic, it repeats itself year in, year out. So there is no room for any other information to come in. So whatever information you get while tracking your data is exactly what it is, because it's systematic and objective. There is no room for maybe you bring another information from somebody else, bring another information from somebody else and putting it together. No, it is objective, it is systematic. So systematic trend following will be very easy while you are tracking all your data. That is why I like trend following, because most of the times it's systematic and objective. Now, what is the difference between tracking of data and journaling? That is a question that a lot of people will want to ask or normally ask. They will say that what of journaling? Journaling is still tracking of data, but I'm telling you the truth that journaling is quite different. Journaling is simply the observing of tracking of data is simply the different parameters that make your trading strategy. It is always relying on past information, while journaling is keeping an active of your trading strategy, like your entry condition and your exit condition. I hope we understand. Tracking of data is observing of different parameters that make up your trading strategy. It's always relying on past information, while journaling is simply the information that you are getting immediately, your entry point, your exit point, your emotional status while you are placing that trade, and the rest of it. It's something that you did just now while placing that trade, how you felt, how you placed your stop loss, were you following your trading strategy. Everything that you noticed while you are placing that strategy is what journaling is, while tracking of data is something that has been done, something that has come and gone, is what you brought together to call it your tracking of data. Now, journaling is also good, as all of us know, because it will help you. It is very important to journal your trading strategy, as the case may be. But to tell you the truth, that tracking of data is more important, because that is exactly what we tell you if you are going up or if you are coming down. If you're executing, a trading strategy always demand that you execute it steadily, religiously, don't deviate from it. That is exactly when you get exactly what you want. So tracking of that data is what we tell you if you are executing that trading strategy properly. Very important. So the information here is that anybody that is trading, if you are a trader, you need to check your data, the data of the parameters that make up that trading strategy. The data that make up that trading strategy, you have to look on it very well to know when you are executing your strategy, the ones to adjust, the ones to not to adjust. If it is tallying with your back test results, if it is tallying with your back test results, good and fine, you need to leave it like that. If you meet any market regime and it needs to be adjusted, you just adjust it slightly. Trading strategy is not needed to be putting one or two indicators as you are executing it, because you must have pattern, but it gives room for a little adjustment, maybe when you are trading your trading strategy, when you are executing your trading strategy and you noticed that the market have shifted. If the market shifted, you need to do one or two things to make sure that you suit the condition of the market at that particular point in time. Without that, you may be trading one market regime with the same way you are trading the other, which is not always good. It is very very important. But as a trend follower, most at times observing that might not be difficult for you, because immediately it will show in your data. It will show in your data information the rate of your losing and the rate of your winning. All those things will immediately show you, and you will notice it and know how you are going to manage that particular trading regime. Thank you very much for being here. Subscribe to this YouTube channel, smash the thumbs up button, and share the content of this YouTube. See you some other time. Bye for now.